Well, we've got a 3.6% decline in revenues, yet a 33% increase in headline earnings per share. EBITDA margins also increasing to 10.9%. You have to be happy with the extent to which your margins are, or your profit margins are opening up, especially through a tough operating environment.
Absolutely. These results for us really represent a more sustainable, repeatable performance. And the board and us were quite happy about it. And you're absolutely correct. The reason why we're able to improve our margins is that we made a conscious decision to focus on high margin, high value services rather than on products. If you look at our profile of revenue, is that about a year ago, revenue, about 20% of our revenue came from products, now only 15%. And that's why you see that multiply effect, that we're getting more margins because we are focusing on services revenue rather than product revenue.
Emphasizing yet again that adaptation is the key to survival here. I mean, run us through some of the bigger alterations you've made to your business processes that puts the company in, in the position it is right now.
Right. The first one is what I mentioned to you, that we focus really on the higher margin services revenue. The second thing is we had a strategy around 18 months ago that we're going to tightly manage our working capital. So we said that we're going to do that. And secondly, we're going to curtail, or rather manage tightly also our expenditure. That has resulted in all this. The second thing is in terms of the way we provide services to our clients, some of those services, we have changed the model that we do that. As an example, one of the areas where we are very strong in providing services, we provide desktop support to a number of clients around the country. One way of doing that much cheaper is, instead of having a number of engineers around the country, you do it remotely, centrally, and that has really firstly improved the customer experience for our service, but also improved the profitability of those services. One thing that we also have done is to focus on some of our proprietary solutions. We have a very good mining technical application. We are slightly ahead of the market with that application, and we have driven that into the market. The acceptance of that product has been very good, both in South Africa and across the world, and that really has helped to make Gijima AST where it is today.
Part of that evolving strategy has been the growth that you've seen in terms of your involvement within the public sector. Now, it has been a good revenue driver for the company. I mean, it's made up 47% of total revenues this time round. Of course, now the concern is that with this reliance on public sector spend, we're faced with a government that is now placing a lot of emphasis on social spend, cutting back on unnecessary expenditure. Is that a concern for you moving forward?
Not quite. It's not. I mean, we are 47% of our business comes from public sector, only because public sector was what was spending in the last 18 months or so. Private sector, there was curtailing of expenditure, of capital expenditure, so that's why you see it slightly lower than where I expect it to be. If I look into the future, I expect public sector to be between 40 and 45% of our revenue, and that will reflect the expenditure in general of government in South Africa. The 47% really is because of the last 18 months of stricter curtailing of expenditure in the private sector. I'm not particularly worried about it at all. I actually would prefer that it is around the 40s rather than where it is now.
Let's take a look at partnerships, and as far as partnerships are concerned, I mean, we're drawing on synergies with other players in the field becomes a business imperative. I mean, how does that rank, and do you see Gijima leveraging of partnerships and alliances moving forward?
Right. As a company, we are generally technology agnostic, so we don't favor one technology against the other. However, we do require strategic partners. So what we have done is to look at some of the more complex solutions out there that are required by our clients, whether in private sector or public sector, and went around the world to identify some of those key partners to work with. As an example, we have a partner in Austria where we are working with them on a project with Sunral for a open road tolling system. Sunral is implementing a new solution where there will be toll gates around the major roads in Gauteng, but those roads won't have a typical toll gate. It will be open with the cameras, etc. We are working with, we are identified a partner around the world to work with them on that, as an example. We also identified a partner in Ireland, where they are very strong around the world in identity management solutions. We are providing that for border control management, etc. So what we have done is to go around the world and identify those key partners that we believe have got unique solutions, and that has paid off.
This, of course, in the face of increased competition in the managed services segment. We've got telecommunications companies like MTN, like Vodacom, increasingly encroaching on this area as well. How do you see this entire playing field changing over the course of the next few years?
I must say that area was going to be a highly contested area. Those guys have got much deeper pockets than we do, so it's going to be contested. However, I think we have some expertise that companies like that do not necessarily have. And if you look at where they are investing their money, it will be in data centers. And in data centers, they do what is called housing, meaning that you bring your equipment, they manage it on your behalf. We go slightly higher on IT stack. We actually manage applications of clients. So that's kind of a unique expertise that you don't get typically from a telecommunications company. However, I see partnerships between companies like mine and also telecommunication companies, because we require one another for us to deliver this managed network services.
You say they hold deeper pockets, but your positive cash position should hold you in good stead moving forward. Let's talk potential growth areas moving forward. Do you see expansion into the rest of the continent, into Africa, being revisited now?
Absolutely. However, I must put some caution to that. What we're not doing is to go into the rest of the continent or the rest of the world, for that matter, for the sake of doing that. What we're doing is we are following our clients. We have a more controlled strategy, if I can put it that way. That's one area. The second part is that we've got some solutions that are now required around the country, around the continent rather. We are following that. And lastly, we have a strong presence in Australia, Canada, and South America because of mining solutions. We're going to follow those investments. But it's not going to be a big bang. I would like it to be more controlled. If you're not careful, you can lose cash in Africa. I like to be more controlled.